Earnings season kicked off today with a host of bank results, and while you could argue that the numbers were somewhat mixed, I gotta tell you something. I liked what I saw. Take First Horizon FHM, one of the larger regional banks in the Southeast with a decent-sized wealth management business and a smaller fixed income and trading unit. Now, this morning, the company reported a small top and bottom line miss, which sent the stock down about 2%. But you know something? There's actually a lot to like in this quarter if you look under the hood. For example, First Horizon delivered stellar 14% deposit growth and fantastic 11% loan growth. These are excellent numbers. And their net interest margin, what they make by lending on your deposits, climbed by 18 basis points to 3% for the first time in ages. Plus, when you take a longer-term view, this is a stock that's run up more than 60% since we last spoke to the CEO nearly a year ago. And I got to believe it actually has a lot more room to run, given that it could be, if we get a bunch of rate hikes, it's going to be fabulous. Let's take a closer look with Bryan Jordan, the chairman and CEO of First Horizon National. Hear more about the quarter and his company's prospects. Mr. Jordan, welcome back to Mad Money.
Thank you, Jim. It's good to be back. Thanks for having me.
Bryan, I think things have changed. I think the country's changed. I think your business has changed. I think that the stock is reflecting that. Are you feeling that level of optimism that a small business index showed that was terrific, that a lot of the companies are telling us that the lenders are doing better? Is it in your area too?
Absolutely. We're seeing a tremendous amount of enthusiasm. Post the election, we saw consumer confidence pick up. We saw small business confidence pick up. We're seeing it in our borrowers. People are willing to borrow money to buy properties, build plant and equipment. We've seen requests for loans go up. So we're seeing a tremendous amount of momentum and feel very, very good about the outlook for 2017 as we start the new year.
Do you think it is sustainable, or was it just the election occurred and people are glad there's no more gridlock, or is it something lasting?
I think it's probably going to be lasting and sustainable if we can get a little bit of relief on regulation and a little bit of improvement in interest rates and growth in the economy. We've been in this low plus or minus 2% range. If we can move it up 50 or 100 basis points with some systemic change coming out of Washington, being fiscal policy, as well as taxation and regulatory policy, I think this could be sustainable and could be a pretty good run for several years.
All right, so give me an example, give our viewers an example of what kind of regulation that may have been stifling good borrowers' chances to be able to build a business or buy a house.
Yeah. And from the financial regulatory standpoint, take buying a house. Know your customer and some of the regulation that came out following the financial crisis and the implementation of Dodd-Frank is an example. And so the amount of detail that's required to get a loan approved, the amount of time, it puts back closing. There's a whole lot of regulation that's made it difficult for customers in that regard. But I'd say it's broader than that. I'd say it goes to, trucking companies' abilities around environmental regulations, energy companies. So there's a whole lot of opportunity, in my view, to see regulation pulled back, both on financial institutions, let us get back to supporting our customers and our community and helping the economy grow. And at the same time, giving the businesses in our communities the opportunity to be aggressive in the way they build their business, hire people, and build for the future.
Now, a lot of people would tell me, Jim, you're way too bullish on this group. I come back and I say, well, wait a second. I got a company that's got 14% deposit growth, got 11% in loan business growing, that has the ability to be able to pay a good dividend, buy back stock. This is kind of what I want. This is better than a company that grows 2 to 3% that's in a packaged goods business or a utility that grows 3%. This has been a change business, what we call a re-rating business. Do you agree that at last, after all the work you've done, that the regional bank growth business that is what it was like in the 80s and 90s could be back?
Yeah, I agree. A lot of it depends on the ability to get some progress in Washington, which I think we will get. But I agree with you. I think our business is very well positioned to grow. Our state, where we principally bank in Tennessee and the surrounding markets, our mid-Atlantic market, and then Houston are well positioned for growth. And I think the industry sector is well positioned for growth. I think there's a lot of pent-up demand in the economy. And I don't think it will take a whole lot of encouragement to see the economy and see business or the business environment take off over the next couple of years.
And one last question. If the Fed were to raise rates 3 times, how would it impact your bottom line?
Well, it helps us substantially. We're positioned for higher rates. If you get 100 basis points, we pick up something like 4.5% on our net interest income, or about $37 million. So in round numbers, you can say about 2/3 of that. So we'd pick up $30 million area, excuse me, 3/4 of that, so about $30 million in net interest income and pre-tax income. So we're positioned for higher rates. We think rates are going to go up. We think the Fed is going to continue to move. We've built in a couple of moves in our plans for 2017, and the market seems to be leaning towards maybe 3 or more at this point.
Well, I got to tell you, those who've stuck with you, you have made a ton of money. I don't think it's over. Bryan Jordan, Chairman, President, CEO of First Horizon, thank you so much for coming on the show, sir.
Thank you, Jim. All
right, look, if it comes in, that's a gift. These are the new growth stocks for the next few years. First Horizon, FHN. Mad Money's back in for the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.